Welcome back to Business on Newsnight. Now, the IMF is warning that delays in finalizing the debt restructuring deal with external creditors before the December elections could pose some risk to the economy. This concern was captured in the latest IMF staff report released after the fund passed Ghana on the second review. There is more in this report.
Ghana recently reached a deal with the bilateral creditors and also an agreement in principle with the Eurobond holders. Together, government of Ghana owes about $18 billion to these creditors. The bilateral creditors' debts is about $5.1 billion and the Eurobond holders is pegged at $13.1 billion. Government is yet to finalize that of the commercial bilateral creditors. The IMF is worried that if Ghana is not able to sign an agreement with these creditors before the close of this year, then that will not be good for the economy and programs aimed at stabilizing the overall health of the economy. There are fears that a new administration taking over in 2025 could push for fresh negotiations with Ghana, and that could not be good in terms of the timelines that the country should finalize a deal with these creditors. There are concerns that delays could also affect the local currency going forward.
And that is a business desk report. Now, the Finance Ministry has accepted the proposed July 23, 2024 date for the presentation of the mid-year budget review. The ministry had earlier wanted Wednesday, July 24, 2024. It, however, appears that it is not working with what Parliament has proposed. Government is currently finalizing engagement with some industry players on their inputs. The Ghana cedis rate of depreciation continued to slow significantly against the US dollar, the local currency, which was trading around 16 Ghana cedis 2 weeks ago. It has now slowed to 15 Ghana cedis, 52 pesos. Some market analysts are linking it to the recent development in the economy. But currency analyst Coach Boti thinks that unless government finally signs agreement with the external creditors, the much talked about stability could elude us.
Actual inflows and outflows will determine the dynamics of the city. So I see probably some correction, but probably not very significantly. And that will happen a lot when we complete the debt exchange eventually and sentiment are fully restored. There is the increasing sense that there will be debt sustainability going forward. As it stands now, we are on the way there, but we've not completed that. And it is when I believe that is complete that you begin to see some offshore interests gradually trickle back into the local economy. That is where the actual FS boost will come from. But at the moment, all the things we're talking about savings are not cash flows, and they won't impact the demand-supply dynamics directly. What it will do is affect sentiment, and that is what is resulting in the stability. I expect more of that stability from now until the exchange is complete.
Courage Boti's lead research person at GCB Capital. Now, Chairman of Tropical Cables and Conductors, Dr. Otinjesi, is pushing for the legislative instrument before Parliament to be withdrawn for further consultation when it comes to pricing of cement products. Now, this is coming at a time when the instrument has been laid in Parliament and should be law very soon. Dr. Otinjesi warns that the bill in its current form could hurt a lot of manufacturing firms.
It is a dangerous path to start going on. And I think that it is time for the manufacturers and the ministry to sit down and let us look at a more market-friendly solution. I think that in the interest of the whole nation, in the sense that nobody wants excessive pricing, at the same time, we don't want to get into a price control regime, I would agree that maybe it's time to ask for a ceasefire, withdraw the LI, and let's look at it.
Chairman of Tropical Cables and Conductors, Dr. Otinjesi. Now, CalBank has recorded some significant turnaround in its operations for the first 6 months of this year. The bank posted some strong growth in all areas of operations of business. Now, this was captured in its half-year numbers released to investors today. The bank ended the first 6 months of the year with a profit after tax of 158 million Ghana cedis, representing almost 50% jump from what it posted last year. According to CalBank, it has now emerged stronger despite the challenging economic environment and impairments taken for last year. Now, the power supply has improved greatly for most manufacturing firms in the country. Development has forced these firms to abandon planned layoff and scaling down their operations. Now, speaking to Joy Business President of the Association of Ghana Industries, Dr. Humphrey Imdake wanted the situation to stabilize going forward.
For the last 4 months, reasonably, we've seen some stability. But as you do statistical analysis, you seek to do this average over a period so that you can restore confidence fully or reasonably above 60 to 70%. So I've indicated that yes, the power stability has been reasonable within the last 4 or 5 months. We pray that that stability goes beyond a year, and then the businessman or the industrialist can have significant assurance to say there's full restoration in the reliability of power.
Dr. Humphrey Imdake is the president of the Association of Ghana Industries. Let's turn our attention to the stock market. And if you had invested on the Ghana Stock Exchange from the beginning of the year to now, returns now stands at more than 30%. Now, that is still better than what you had gotten on your treasury bills and other investment instruments on the market. And that's all for business on Newsnight.